Hello and welcome back to Mindflow Trading. I'm doing something a little bit different in this video today. I was about to go through a review of my trading week for my own personal growth, and I thought that would probably make a really good video that would help you guys out. So here it is. In this video, I'm going to share a few different things. I'm going to start off by reviewing my manual day trading strategy from the week's trading on pound dollar, which is the major Forex pair that I trade. Following that, I'm going to look in MetaTrader 5 and review my trading bot that I have recently developed. This week has been the first week that I've managed to get it performing in MetaTrader 5 after translating the code from MetaTrader 4. So we'll go through that together and also look at the data, reviewing it in ChatGPT to see how we can refine it to make it more profitable. And later in the video, I'm going to do a little bit of online shopping that you might want to witness. I have just been working on a new video that I'm hoping to come out soon for you, comparing two prop trading programs offered by the 5%ers. I'm really excited about it, and I am going to purchase one of those later in the video. So I'll talk a bit more about that later in the video. Firstly, I've just gone on to TradingView, which is the charting software that I use for trading, and I've loaded up the chart for pound dollar. Now I'm going to stick with the 15-minute time frame. Of course, you can go to a larger time frame, that is what holds the authority, but it's pretty much the same if you zoom out and look at all the candlesticks. It just depends on what your eye prefers to see. And I like to see all of the candlesticks here. And I'm going to keep this indicator on my charts as well. It's called the previous daily high and low indicator. It's very, very simple. The light blue line at the top shows the previous daily high, and the dark blue line at the bottom here shows the previous daily low. My strategy revolves around these key daily levels. I'm looking for breaks and closes of these key levels, utilizing market structure together with the Fibonacci retracement tool. And I've zoomed out here on the 15-minute time frame so that we can clearly see what happened this week for pound dollar. First of all, let's break down the market structure perspective. Very, very simple. From the weekly open on the Monday, price pushed up, it broke Friday's high and it closed above it. And pretty much into Tuesday, we had another push up, a pullback into Wednesday, another push up, big, large wick rejection, rejecting these highs, losing its momentum to the upside. And then on Thursday, we had that change in behavior that we sometimes see towards the end of the week. We broke the structure of Wednesday and closed down here. We got to pull back up, retesting this area on the Thursday, broke back down. And then Friday, we continued with this downtrend. So this week, we have had an uptrend, we've had a change in behavior, and we've had a downtrend. Could this have been traded and profited on? Of course it could have done, using these key daily levels. And I'm going to just go through this quite quickly, keeping it so simple so that you can see an overview of how easy a strategy can be. Now we know that we've got this clear trend. Let's just look in on Monday here. Now, I know you may be thinking, well, it's easy to plan a trade when the trade data is in front of you and you know that it's going to go up. And yeah, that's true. But I'm not really trying to prove that it works. I'm just seeing if it would have worked from a review perspective to see whether this strategy would have been profitable. And why am I doing that? Well, I didn't actually trade my manual strategy this week because I was focusing so much on getting my trading bot refined and working. So I didn't trade my manual strategy. And I wanted to check in to see how it would have performed. So on the Monday, we got the break above and the close above during the London session. My manual strategy is valid during the New York session. But what I'd like to mark here are the key structural points. So we had a pullback here in the London, and then price pushed up and made a new high. Now in the New York session, price came back down. And ordinarily, my strategy after a break past a key daily level would revolve around dropping the Fibonacci retracement at the previous structure, which is this one here, and placing the high at the highs. As we are pushing up, we're looking to go long. It loads up these three areas of optimum trade entry, which is where I'd usually place a trade. I could have placed a trade here and waited for price to come down. So let's just say that the order was placed at this higher level of the optimum trade entry. My stop would have been below the structure, so I could have used a 15 pip, but to be honest, I probably would have used a larger stop. accounting for a stop below the key daily level. And my target is always 1.5R, so I'm looking to make a little bit more than what I'm risking for the trade, which meant that on the Monday, I would have had to have held this overnight, but during the early hours of Tuesday morning, it would have hit my profit target. Moving on into Tuesday, would there have been a valid trade? It's pretty much the same flow. From the Tuesday, we did get a break and a close above the previous daily high. Price is still pushing up, it's trending up, and I'd be looking for longs following this intraday trend. Marking the key structural points here, there was a high major in the London session, a pullback here, and we got this consolidation during the middle session just before New York opened. And when New York opened, we got a strong push up and a new high forming. The key level to respect would be this first level that was made here. This was the higher low, and it got tested 1, 2, 3 times before the push up. And that would be the level that I would use to drop my Fibonacci retracement tool from. Dropping it once again at the highs. And you can see the 3 areas of optimum trader entry that once again did get triggered just following this New York session here. Would I have taken this trade? Probably not, to be honest, because it was just after the New York session. But if you were more of an aggressive trader, there was definitely a trade in there. A stop would be below this key structural level, and once again I would have aimed for a 1.5R target, which would have been hit the following day, but it would have had to have held all day and held during drawdown as well. But I wouldn't have taken that because it was out of my trading time, so I'm going to remove that right now. But the same technical aspect here still stands, because from this high that was made during the New York session, price pulled back, but it didn't break and close below this structure here. It didn't violate it, so we're still in an uptrend. We then made a new high up here. So it meant that technically the following day I could have gotten into that same trade, because all of Wednesday is consolidating in this range that was made. We're still respecting the structure. I could have still gotten in during the London session here with the same 20 pip stop and 1.5R target. But I wouldn't have taken this on Wednesday, and that's because we had some major news release due out for the dollar, which was FOMC. And past experience has taught me to just not trade a day when FOMC is due out because it can be incredibly choppy. So even though this technically would have won, I wouldn't have probably taken that trade anyway. Now you can see where FOMC news was released, because we had this large candlestick push up, we had this large wick rejection, and then we had this immediate reversal as we had this huge candlestick coming down, creating a gap here in the market. This gap is created because this candlestick, the candlestick below it and the candlestick after it, the wicks don't touch. There's just one candlestick range here, and it creates this big gap. And this gap actually gets retested during the session after London and before New York the following day on the Thursday, which you can see here as this wick rejection. An interesting thing about that is if we place the Fibonacci tool from this high here, drop it at the low of Thursday, because we're looking at Thursday's trading data now, this actually brings up the optimum trade entry levels, these 3 lines that coincide with this gap and also this wick rejection. Now, why am I looking at this for short now? Well, for a few reasons. Do you remember the structure that we had over here from the Tuesday? That was the new higher low. Once we got a break and a close below that on this Thursday, that violated that structure and it caused a change in behavior. So that was when prices basically moved from going up to going down. And the added confluence is that we got a break and a close below the key daily level, which was the previous daily low. As per my strategy, that would mean that on the Thursday, I would be looking for shorts. And as per my entry strategy, there would have been a perfect opportunity here, except it wasn't in the New York session. That wick rejection was made at 12 o'clock midday. But if you do trade any time of the day, there is definitely an opportunity to get short there. Moving on into Friday, the last trading day of the week, let's just repeat the same process, looking at market structure from the day open. And we had a push down. We did break and close below the previous daily low. Pullback. London session, we had another breakdown, and we kind of created this pullback here, another low, and another pullback respecting this one before it made a new low of the New York session, which meant that once again, this was the key structural point. It was the new lower high and what I would use for a Fibonacci retracement tool. Dropping my fib tool from that level using the bodies and using the low of the day during the New York session. I would have set an order at the optimum trade entry for a short, and my stop would be around about 20 pips just above that level. My target would be 1.5R, and as it stands, if we zoom in, I would have got triggered into this trade, but I wouldn't have actually hit my profit yet. I would be in this trade at the moment, very close to profit, most likely with a trailed break-even stop. A very quick overview of what would have been my week day trading pound dollar based on the decisions I would have probably made in the moment. But it gives you an idea of kind of how I would think and ways that you can learn from what happened using past trading data. Trading is very much about constant learning, continual professional development, and constantly gaining better skills, better experience, and growing stronger as a trader. But of course, I didn't do that because I was focusing on my trading bot. So here we are in MetaTrader 5, and you may just be wondering how my trading bot is performing. Well, this week has been the first week I have tested the bot out in MetaTrader 5 after translating the code from MetaTrader 4. Why? Because MetaTrader 5 is better, more brokers use MetaTrader 5, and more prop firms, including the 5%ers, use MetaTrader 5. So let's go into the history here. First of all, I'm going to just review what the results were from the last week of trading, the 15th of September to the 19th. As you can see, it was a profitable week. I made $102 minus commissions, and the swap gave me just shy of $50 profit. Yeah, it's not a lot, but this is based on what started off as a $5,000 account. Given my testing, it's down at the moment. So this is basically just over 8% on the account, which is still not bad for a week. But what I think is most interesting, if I just filter this on the Wednesday's trading day, which was the day of the FOMC news release. Wednesday morning, when I was turning my bot on to let it run for the day, I considered not letting it run because ordinarily I wouldn't have traded that day due to the news release. But I was curious to see how it would perform, so I let it because we're in a demo and there's no risk, and this is all about learning and growth. On the Wednesday trading day, it took a $170 loss. And what I think is interesting is I wouldn't have done that in the live markets. It wasn't an emotional reaction at all. We're in the demo. It was from a curious reaction. I wanted to see how it performed. If I hadn't have let it run that day, 170 would have been saved, plus my 50 profit from the week, which would have made $220 profit, which is a lot more interesting. That is just over 4% profit on the week, which personally I find is really encouraging for this trading bot. So I've learned something when it comes to news trading, but what about some of the fine things we can review, such as what was the best performing currency pair, what was the worst? How am I going to analyze that? Well, the easiest way for me to analyze that right now is to just paste this into GPT and ask it all of the questions I have in my head. How am I going to do that? When I try and highlight all of these rows, it won't really let me. So I think the easiest thing to do is to save this as a HTML file report. Here is the report that I've just saved and I've opened in my browser. But I can easily just highlight all of the positions that were taken this week. And I'm going to click Control and C to copy those. And if I scroll to the bottom, it just shows some results here on a graph. It gives you quite a lot of information here. So it does give you your profit, but I want some specific details. So let's go to GPT. If you're watching this and you're not sure what this is, ChatGPT is a very clever AI system that you can use for free, although it does give you paid packages. I created a separate video where I shared actually creating this EA bot using ChatGPT, but now I am using ChatGPT to just review and refine the bot. So let's ask a question. So I have asked for it to tell me the best and the worst currency pair, because if I have a currency pair that's just losing, I'm not going to continue trading that pair. And I've got a feeling that Bitcoin is going to be that pair. I'm also asking where I can make improvements, if it's got any suggestions, and whether there are any correlations in times when it comes to winners and losers. Because if I'm constantly taking losers during a certain time, I can edit the code in my bot to avoid that time for trading. And this is why I love using ChatGPT. It just makes it so much easier and it lays everything out neat and tidy so that you can just read it. Looking at the different currency pairs, we traded some indexes, the US 30, multiple trades, and it was positive, the best performing instrument. So that was US 30. Consistently profitable on pound yen, which is very good. Good net performance on pound dollar. Generally positive for the US 500, break even for US Swiss, and the negative pairs was actually Euro USD, which was losing more than it was winning. But I think I'm going to keep that in still to continue testing because that's not really massive. Whereas Bitcoin, as I suspected, took 5 trades and they all lost. So that was my worst instrument by far. Interestingly enough, USD CAD, multiple trades, nearly all losing. Australian dollar and euro pound. A small sample, but all losing. Now, as those are quite a small sample, I'm going to leave them in for now. I don't want to make too many changes because then I won't know which change worked and which didn't. So I think at this point, I'm going to drop Bitcoin. And I'm curious. If I had not taken the Bitcoin trades, what would my P&L be? So it took a total of $264 loss for Bitcoin, which meant that obviously if I hadn't taken those trades, it would have made an extra $264. Going back to my initial question, improvements for profitability. ChatGPT said to cut weak instruments. And to begin with, I'm going to follow its advice and stop trading Bitcoin, which hasn't proved profitable at all. It's saying that it's a decent reward to risk ratio. I'm using 2-to-1, so I'm looking to make double what I am risking for the trade. And it's just commending the position sizing, which I have coded to risk no more than 1% of my account. Now, timestamps, this is what I'm kind of interested in. Profitable trades cluster happen between 9 and 4 GMT, which is what I was aiming for with the code. Losing trades appear more often late in the day between 4 and 8. Well, technically my bot shouldn't be trading then, so that's something I need to check to make sure the bot is actually working correctly, because I have coded this so that it only trades between 9 and 4. Early London produces strong pound yen and pound dollar trades, and I know that those pairs actually provide a lot of profits. So maybe I should even run a second version of this bot that trades just the London session. US indices did better during the New York Open, 2:30 till 4. And it summarizes all the key takeaways as well. I've made a note of some of the improvements I'm going to make, so I'm going to remove Bitcoin. Let's do that first. Bitcoin, US dollar, goodbye. And so I have dropped Bitcoin from my testing. It also advised me to drop USD CAD and Euro USD, but there was only a couple of losers for each pair. So I'm going to continue that for another week to get more trading data and review this again in a week's time. If they're still performing badly, I may drop them next week. And finally, I said to make sure that I do have my trading times set up. So let's just go into the bots. Let's go for this one here. And these are all the parameters of my trading bot. Now I do have a parameter set for trading between 8 and 4. I may change this from 9 until 4 because that seems to be more profitable. But let me check with GPT. So what I have just checked is whether I am profitable between 8 and 9, and the answer is yes. So I'm going to keep my timestamps the way they are for now. I have one last thing to do as part of my review for the week, one last thing to share with you, and that is the next step to prepare for next week. And I'm talking about buying a program. So you may know that last year, 2024, I passed the hypergrowth program with the 5%ers, becoming a fully funded trader. And now I'm going to enroll onto their high stakes program. That's it. I purchased the $20,000 high stakes program in preparation for next week's trading. I'm going to use this program purely for my manual day trading strategy on pound dollar. Coming up, I do have a video where I compare two of their programs, the high stakes program with the bootcamp program, because I'm considering enrolling into bootcamp to trade my bots, but that is a future thought. Make sure that you're subscribed to the channel below with your notification bell ticked so that you catch that video. Meanwhile, if you've enjoyed this video, please let me know by hitting that like button. Don't forget to subscribe to the channel, and I'll catch you in my next video. Thank you for watching. Bye.